Hello friends, a very warm welcome to my channel. In today's video, we are going to analyze a small cap company called CL Educate. So this company is into a very interesting business which is related to the EdTech as well as the events management business, which is both physical and virtual. So nowadays we are focusing more on the small cap analysis because I feel more or less the mid caps and large caps are fully valued and there exists a lot of opportunities in the small cap space, and the small cap companies have a very bright future to become the future mid caps and large caps very soon because of the fast growth in the Indian economy. So if you're new to the channel, please do subscribe and hit the bell icon, and if you're not a part of our Telegram channel, do join today as we discuss daily the market analysis and lots of interesting news and views on our Telegram channel as well. So let's get started. So CL Educate was started in 1996, so it's not a very new company, although it's still a small cap company. This company is broadly into two types of businesses or business segments, the EdTech and the MarTech business. We will discuss in detail about this business in the coming slides. So when it comes to test preparation, this company is the market leader in India, and they have around 200 physical test preparation centers in India spread across the country, and their virtual events business is done through their platform called Keystone. Until now, they have hosted about 200 plus virtual events. Mainly this business got some traction in COVID as people were not able to meet offline, and they also have a publishing business in their EdTech segment, which is by the name of GK Publications. So the company believes that now they have entered a growth phase because the industry in which the company operates has transformed a lot. So earlier in the EdTech, there were physical test preparations. People used to go to physical schools and colleges to seek education, and the publishing business also was related to the tangible or the physical books which we used to read. But now things are changing. People are trying to study online, or at least they are taking tuitions online. They are preparing for competitive exams online. The publishing business has also become digital as people are more using the interactive content rather than reading physical books. So these kind of changes have come in the EdTech segment. In the MarTech segment, what happened? Now instead of hosting physical events, companies are hosting virtual events. So these kind of transformations are happening in the events business. So because of these transformations, the company believes that they have that skill set, they have the technology to ensure a high growth in their business from here on. So that is what the management of the company is claiming, that they will achieve tremendous growth in the next 3 to 5 years because of certain initiatives or technologies which the company has. So what the company believes is, going further in the growth segment, the education would be phygital. That means it could be both physical as well as digital, and the platform business which the company is developing, so that will be monetized heavily. And the events business, which the company has a platform called Keystone that will host online virtual events, as well as the company is also working on the Metaverse technology. So the physical businesses will be converted into the Metaverse, and their customers will be able to learn about the products and the business in the Metaverse. So this is a brief history of the company. During the journey in the last few years, the company has done a lot of acquisitions. So it has even grown through the inorganic way. So in 1996, they got incorporated. In 2008, they acquired a company called Keystone, which is their events management business. The 2011, they acquired a company called GK Publications, which is into the publishing business. In 2017, they acquired another company called Accenture Knowledge Management, and in 2017 again they acquired another company called IceGate Educational Institute Private Limited. So these couple of acquisitions were more towards their education segment. And in 2022, the company has recently sold one of their land pieces, which generated about 48 crores of money for them, and they will reinvest this into their business, and they have also done a buyback recently. So let's talk about the management of the company. Mr. Satyanarayan is the chairman and executive director of the company. He's one of the founders of the company, with the company right from the incorporation. He has almost 30 years of experience in this field. He has done his bachelor's in computer sciences from Stephens College, and he has done a postgraduate diploma in IIM Bangalore. In the past, he has also won awards for the most promising entrepreneur in 2009. Now briefly, let's understand the overall business segments. So broadly, the company's business is divided into two segments, which is the EdTech and the MarTech. In the EdTech business, the company runs through a brand or their company called Career Launcher, and the MarTech business is mainly done through Keystone. In the EdTech, they are doing the test preparation business as well as the publishing business. And in the events business, their customers are broadly classified into two categories, which are the enterprises as well as the institutions. So when we say enterprises, more or less we are talking about the corporates, and when we talk about institutions, they are more related to the educational institutions or the other non-profit institutions, those kind of bodies. When we talk about the corporate structure of the company, it looks complicated with so many subsidiaries, which is soon going to be simplified as they will be merging their subsidiaries, as most of them are wholly owned subsidiaries into their holding companies. So Career Launcher is a 100% subsidiary of CL Educate, and there are several other 100% subsidiaries like Career Launcher Foundation, Keystone, iSkate. So most of the businesses are wholly owned by CL Educate. In a way, they are doing different segments of their businesses through these different wholly owned subsidiaries. Now let's talk about their EdTech business in more detail. The EdTech business is done through their company called Career Launcher. So in this business, they help students to prepare for competitive exams like CAT, CLAT, GRE, GMAT. So these kind of popular national, international competitive entrance exams preparation is done in this business. They also have some knowledge products for tests like IIT, JEE, NEET, and recently there's a new exam coming up called CUET, which is Common Universities Entrance Test. So earlier there were different universities conducting different entrance exams for their admission, but going further there will be uniformity where a common test would be conducted, and based on the marks of those tests you can take an admission into all the universities who accept that test. So the number of students who are appearing for that exams will be huge because people from all across the country will be writing those tests. So in the test preparation segment, this company is the market leader in India, and they have almost 200 test centers which are expected to nearly double in the coming years, and in the year FY22 they have more than 4 lakh customers in this segment. These are some achievements in their EdTech business. For these kind of companies, what are the achievements? The students who are using their platforms to prepare for the exams, if they are able to get into those universities, or they are able to secure highest marks, it's kind of an achievement for Career Launcher, as they have been using it to prepare for their exams. So they have got, some students have got rank 1 in CLAT in 2022, and in AI LET also they have got first rank in 2022, who has used Career Launcher to prepare for their exams. When it comes to MBA, from IIM until now more than 10,400 calls have been received by their students, and specifically when we talk about IIM Indore, there have been 91 calls, and IIM Rohtak there have been 24 calls. So like this, based on the success of their students, the success of Career Launcher as a platform can be measured. So as we have discussed, CUET is going to be the next big thing, as many universities across the India will be accepting CUET as the basis for admission into their universities. First test would be conducted in FY23, and for this exam, Career Launcher has already launched preparation for almost 14 subjects. The company believes that this particular product or business can generate a revenue of more than 100 crore in the next few years, and roughly about 15 lakh students would be appearing in the first attempt is their estimation. So these are the 14 different subjects which the company has already started courses on for the common university entrance test. Now let's talk about their consumer publishing business. Their consumer publishing business is done through a subsidiary called GK Publications. In this, they have different classifications, which is technical subjects, the non-technical, and the school business. This business generates roughly margins of about 39%, which is very good for the company. Now coming to the MarTech business, this business is done through their platform called Keystone. So as you can see on the screen, Keystone helps enterprises organize virtual events for their different events like conferences, meetings, exhibitions, etc. These kind of well-known companies and brands have started using Keystone as a platform to host their virtual events like Dell, AWS, Microsoft, Tata, Sun Pharma. So along with their virtual events in the MarTech, the company is also doing marketing as well as branding for their clients. So in the marketing business, they do website development, content marketing, and the other things. In the customer engagement programs, they do loyalty programs and other things for their customers. So along with the virtual events, they are also doing branding and marketing business for their clients. Then another subsegment of their virtual events is the Metaverse. So the company is already working on their own Metaverse platform, which is called Valuations. So their Metaverse business is done through this platform, and a few of the clients have already registered for this platform, and they are further working on improving these platforms. So in this platform, what will happen, instead of just a 2D or a 3D kind of a virtual event, people will actually get an experience through the Metaverse universe about the company's business and the products which the company is developing. So post merger, what will happen, the subsidiaries will get merged into the company, and the organization structure will get simplified into the consumer segment as well as the enterprise segment. Segment wise revenue, if you see, the EdTech segment has grown from about 10,669 lakhs, which is about 106 crores, to about 129 crores in FY22, and the MarTech segment revenue has grown from about 75 crores to 78 crores in FY22. Around 38% of the revenue in the total FY22 is contributed from the MarTech segment and around 62% from the EdTech segment. In terms of geography, India contributes roughly about 90% of the business of the company and about 10% comes from overseas. And this overseas business also can grow more after the introduction of the Common Universities Entrance Test, as there is a possibility that the CUET may be accepted by the universities abroad also. Now let's briefly talk about the industry in which this company operates. Let's talk first about the EdTech industry. The market in India is expected to reach a size of about 225 billion USD by 2025. And there may be roughly about 250 million students which are going to school. So that can be the potential size of the market in the industry. In the 2023 Union Budget, the government has allocated close to about 60,000 crores for the education segment. And talking specifically about the EdTech segment is expected to grow at a CAGR of nearly 40% for the next 4 years. So you can imagine if the industry itself is growing at this rate, there can be so much business for the companies operating in this segment. EdTech segment broadly you can categorize into 4 categories, which is the K-12, which is up to the 12th standard business. So people studying under this segment will buy the courses or take the tuitions offline. Then the next is the test preparation for the competitive exams like GMAT, CAT, CLAT, and all these things come under the second subsegment. And another subsegment for this EdTech category can be the skill development for people who are already finished their education, but they further want to sharpen their skills. And the fourth can be into the online certification for people who are already into jobs and they want to further increase their qualifications for better job prospects. So these kind of broad subsegments can be into the EdTech segment. Now let's talk about the event sector specifically. The event sector is expected to grow at a CAGR of about 11% for the next few years. And specifically when we talk about the virtual event sector, it is expected to grow at nearly 21%. So the virtual events can be expected to grow faster, which is the primary area of business of this company. Coming to Metaverse, then Metaverse, as you know, the adoption is increasing day by day. And there is an estimate that there could be transaction worth about 2.5 trillion by 2030 in Metaverse. And the Metaverse business is expected to grow at a CAGR of about 47% in the next few years. In terms of competition, there is stiff competition in the fields in the company operates. In the EdTech segment, the company competes with businesses like Byju's and Akash, Veranda Learning, which is also a listed company now, which has acquired Time. And there are a lot of regional players also like Allen. In virtual events, there are several companies which are doing business, especially in the unlisted categories in India as well as internationally. Few of them are iBentos, Vouch Pro. So these kind of companies compete with CL Educate in their MarTech business. In terms of competitive edge or economic moat, the company has some brand advantage as they have their existence for the last couple of decades. So people trust them more if they launch a new product. They already have established relationships with different corporates and institutions or even schools, which helps them to sell a new product faster than a new player. The management has spent 2 to 3 decades in this business, so they have that vast experience. So they have transformed themselves into an asset-light business model going further. They already have market leadership in the test preparation segment. They have developed certain technologies, acquired certain tech companies to do their business. And obviously, there could be some first mover advantage as they are already into this business for somebody who is entering now. In terms of growth outlook, the few triggers for their growth can be the CUET, which is the Common Universities Entrance Test. A lot of people will be taking this test, and all those people who take this test will need a platform to prepare for their test, which is a career launcher. So the company believes this can help CL's business grow 2 to 3 times in the next few years. The company is focusing on improving their ROE and ROCEs by 15 to 20% in the next few years. And presently they operate about 200 centers. In the next few years, the company aims to operate about 500 centers. The management says that their vision is to become a $1 billion market cap company in 3 to 5 years from now. They have launched Wasmos, which is their Metaverse platform, and they are aiming to get a lot of brands online with their Metaverse platform. They are working on newer technologies like AR, VR, blockchain, and going further, they will continue to add new products in their EdTech as well as their virtual events platforms. The management is even open to demerge both these businesses as they operate already as a independent business units, and they are even open to strategic sale of one of their businesses if they get a strategic investor. They aim to reach every city and town of India, and they also aim to increase their US business and increase the share of their international business in the revenue. Now, what are the risks which the company can face while they aim or while they execute their growth plans, there can be changes in the test pattern, so they have to reinvent or change the entire code structure which they've already developed. There could be technology risk. The platforms which the company has already developed can become technologically obsolete if they don't keep upgrading it as per the latest technologies. Metaverse, which the company is betting on and investing highly, is still in the nascent stage. So we cannot be 100% sure that the people would prefer to use Metaverse going further. Cybersecurity risk, which is there for all the tech companies. There is a stiff competition in this field from people who have deep, big pockets. So that could be a big threat to the business of the company. The number of competitive exams keep changing, so company has to mold their business accordingly. Having growth plans is different, but executing them and meeting the growth targets is different. If they fail in their execution, that could be a big risk to the company. Now, after understanding the business, understanding the competitive environment, let's come to the financial figures. In terms of revenue, the company was not able to show any substantial growth in the recent years. They have done about 200 crores of revenue in FY22. So they are still not able to surpass their pre-COVID revenues. In terms of EBITDA, they have incurred losses at the EBITDA level in FY20 and 21, and they have become profitable, showing 20 crore EBITDA in FY22. In terms of EBITDA margin, this has also been volatile. We will have to keenly watch and see what can be the substantial, sustainable EBITDA margin for the company going forward. In terms of profit after tax, they have made losses in FY20 and 21, and in FY22, they have made a profit of about 14 crore. In terms of profit after tax margins, like we discussed for EBITDA margins, we have to closely see what can be the practical profit after tax margins the company is able to maintain going forward. The share capital has been constant, somewhere around 14 crores. The reserves have declined because of the losses which the company incurred in FY20 and 21. The borrowings have reduced, which is a good sign, and they have a debt equity ratio of just about 0.08, so it's almost a net debt free company. In terms of trade receivables, it's just about 50 crore because the edtech business generally doesn't have receivables. The debtor days are reducing and they have come down to about 88 crores. The cash equivalence is somewhere around 20 crores on the balance sheet in FY22. The operating cash flows were negative in FY18, but thereafter they have been positive. The free cash flows also was negative in FY18, but further they have started making positive free cash flows. The ROCE also has been volatile like the profit margins because the company incurred losses in FY20 and 21. And in FY22 they have done an ROCE of just about 6%, which is not something attractive from a shareholder's point of view. But as we have discussed in the growth plans, the company aims to make an ROCE about 20% and ROE about 15% going further. But we have to closely watch whether the company is really moving in that direction or not. Coming to the shareholding pattern, public holds about 38% stake in the company, FIS GAI is about 8.8% and 1.78%. And promoters hold about 51% in the company. There's no pledge. Promoters holding has slightly increased in the recent quarters from about 49% to 51.1%. In terms of valuation, the company does a revenue about 226 crores, EBITDA 9%, ROC about 6% and PE about 31. Market cap to sales is somewhere around 2x and PB ratio about 1.8. So looking at the financials of the company presently, I feel the valuations are fully priced and I don't see any margin of safety of investing at the present valuations. So we have to closely watch the improvement in the financials of the company and actually whether the company is moving as per their growth plans and the results are coming in the numbers or not. When we see clearly that the results are visible in the numbers and the valuations are getting a little reasonable and we see some margin of safety, only then this company becomes investable from a investor point of view. The stat auditors of the company are Volker Chandoik and Company. ROE is about 4%. Dividend, the company doesn't pay any dividend, and roughly about 3.62 crores is the remuneration paid to the executive directors of the company. Now, if you look at the weekly chart, the stock has made a kind of a rounding bottom formation and it's going upwards. So it's showing good strength from a technical perspective. So people who invest based on technical analysis, who are willing to put a stop loss, can take a chance of investing in the company by putting some stop loss. But generally we invest from the valuations perspective. So from valuations perspective, looking at the present financials, I don't see some margin of safety in investing at the current levels. So this is about CL Educate. To summarize, let's discuss the thesis points. The sectors in which the company operates are fast growing sectors, growing at the 30 to 40% CAGR. So there will be huge sector tailwinds for the companies to grow. The fundamentals of the company are slowly improving. We will have to closely watch whether the company continue to improve or this is only a one-off improvement. The company has very good growth plans, but we have to see whether those targets are being met or not. The company is also working on newer technologies, especially in the field of Metaverse, which is different from any other company in the listed space. In terms of antithesis point, for me, the biggest threat for this company is competition, because there are people or the companies with bigger and deeper pockets to compete with them in the fields which they are operating. They will have sufficient technology also to compete with such companies. Another risk is the risk of execution, as whatever promises the company is making in the growth plans they are making, whether they are successfully executing or not. In terms of funding, if the company wants to scale up big, they will need money, as they are not able to generate enough free cash flows. So it will be interesting to watch how the company will manage to get funds for their growth. And whatever technology the company is developing, whatever the business model the company has, if that kind of a technology or business model fails, then that could be a big risk for the company. So this is about CL Educate. I hope you like the unbiased analysis. I have given you perspectives of what can be good and what can be bad for the company, what can work out and what cannot work out for the company. So you have to closely watch this space going further, and if you find things interesting, if you find numbers improving, if you find the growth reflecting in the numbers, it will definitely turn out to be a good bet in this sector. So thank you for watching and have a wonderful day.